Meta's astounding $80 billion investment into Reality Labs aimed to revolutionize the digital landscape, but its metaverse vision is stumbling. Horizon Worlds, their flagship virtual reality platform, sees fewer daily users than many mid-tier mobile games. Despite the hefty expenditure, the dream of widespread virtual worlds is faltering dramatically. The metaverse promised a revolutionary digital frontier, yet it stumbled spectacularly. Despite over $80 billion poured into Reality Labs by Meta and Horizon Worlds' user base lagging behind a mid-tier mobile game, the dream faded. Why did this visionary idea flounder? And what does it mean for future tech landscapes? The corporate metaverse dream is unraveling, with Meta's $80 billion venture and Microsoft's AltSpaceVR closure spotlighting the struggle. While Horizon Worlds falters, attracting fewer daily users than Candy Crush, Apple's Vision Pro also stumbled. So, where did the billions go? And what's next for spatial computing and VR/AR innovation? The concept of the metaverse originated in Neal Stephenson's 1992 novel, Snow Crash. In this visionary tale, the metaverse was imagined as a vast digital universe, a shared virtual reality where users could live, work, and socialize. This idea captured the imagination of tech visionaries and companies alike, promising a digital frontier that merged physical and virtual worlds. Fast forward to the 2000s, Second Life emerged as a precursor, drawing millions and sparking interest from corporations, before Meta, Apple, and Microsoft jumped into the fray, investing billions to bring this vision to life. During the COVID-19 pandemic, as people retreated into their homes, digital interaction became a lifeline, igniting an unprecedented rush towards virtual realms. Companies like Meta, which invested over $80 billion in Reality Labs, envisioned the metaverse as the next frontier for social interaction and business. Apple launched its Vision Pro, betting on immersive experiences, while Microsoft attempted to revolutionize digital spaces with platforms like AltSpaceVR. These efforts promised new dimensions of engagement, catalyzing hopes and hefty investments. Yet, despite these ambitions, the journey has been fraught with challenges and diminishing returns. In 2021, Mark Zuckerberg made waves by rebranding Facebook to Meta, signaling a hefty $10 billion annual commitment to building the metaverse. Industry analysts buzzed with excitement, predicting the metaverse could become a trillion-dollar market. Tech giants and startups alike scrambled to stake their claims, companies like NVIDIA and Qualcomm investing heavily in virtual spaces. Virtual land sales soared, exemplified by a digital estate in Decentraland fetching $2.4 million. It was a new frontier, and the hype promised a digital utopia where our reality and virtual experiences would seamlessly intertwine. Meta, the tech giant formerly known as Facebook, made a bold move by investing over $80 billion into Reality Labs, a division dedicated to pioneering virtual and augmented reality technologies. The ambition was clear: to create an expansive metaverse where digital and physical worlds seamlessly merge. However, despite this monumental financial commitment, the dream hasn't materialized as expected. Reality Labs has faced a barrage of technical challenges that have hampered progress. For instance, the Oculus Quest headsets, while popular in their own right, struggle with issues like limited battery life and discomfort during prolonged use, factors that detract from user experience and adoption. Moreover, user engagement has lagged significantly behind expectations. Horizon Worlds, Meta's flagship metaverse platform, boasted fewer than 200,000 active users by mid-2023, a stark contrast to the millions on platforms like Fortnite. The technical hurdles, combined with these engagement challenges, paint a picture of an ambitious project that is yet to resonate with mainstream audiences. As Meta grapples with these realities, questions loom about whether the immense investment will ever yield the transformative results envisioned. Horizon Worlds, Meta's ambitious playground in the metaverse, has struggled to capture the hearts of users, seeing daily active users dip below 200,000, a figure that could be outpaced by a mid-tier mobile game like Candy Crush. At the heart of these low numbers lies a series of challenges, beginning with clunky interfaces that make navigating the virtual space feel more like a chore than an adventure. Users have reported cumbersome controls and less than intuitive design choices, which can frustrate those who are used to the slick, seamless experiences provided by other platforms and games. Beyond the technical hiccups, the lack of compelling content has been a major stumbling block. Unlike gaming giants such as Fortnite, which offers dynamic events and a rich ecosystem of activities, Horizon Worlds has struggled to provide engaging experiences that keep users coming back. While there have been some creative user-generated spaces, the overall content offering falls short of immersive expectations. This lack of innovation and failure to deliver a unique, sticky experience has made it difficult for Horizon Worlds to grow and capitalize on the billions invested in its development. Apple's Vision Pro headset was heralded as a game-changer in the augmented reality space, yet its launch has been less than stellar. Retailing at a steep $399, the Vision Pro didn't resonate with the mass-market audience Apple typically captivates. Despite the company's reputation for turning technology into must-have gadgets, the Vision Pro's high price tag deterred even the most ardent Apple enthusiasts. Functionality was another stumbling block. Consumers expected revolutionary features, but what they got was akin to a high-tech prototype rather than a polished product. The device excelled in certain areas, like eye tracking and spatial audio, but these weren't enough to justify the cost. With limited apps and a user experience that fell short of Apple's seamless standards, it struggled to find a place in everyday life. This misstep echoes the broader struggles in the spatial computing and VR/AR sectors, where lofty ambitions have often outpaced reality. While Apple is no stranger to iterative development, the Vision Pro's lackluster debut serves as a sobering reminder that not even its storied brand can guarantee instant success in uncharted waters. Microsoft's decision to shut down AltSpaceVR in early 2023 was a stark signal of the metaverse's turbulent state. Launched in 2016, AltSpaceVR was initially a pioneer in social virtual reality platforms, aiming to bring people together in immersive spaces. Despite initial enthusiasm, the platform struggled to maintain a substantial user base, eventually succumbing to financial pressures. This move reflects a broader strategic shift for Microsoft, which recently acquired Activision Blizzard for $68.7 billion. Indicating a pivot towards more traditional gaming and away from speculative metaverse ventures. It underscores the harsh realities of investing in virtual environments that have yet to capture mainstream attention or deliver robust returns. The retreat also highlights the challenges in achieving widespread adoption of VR technologies, which remain hampered by high hardware costs and a lack of compelling content. Microsoft's decision to abandon AltSpaceVR suggests a recalibration of priorities, focusing instead on more immediate, lucrative opportunities in gaming and enterprise solutions. It raises questions about the future viability of the metaverse as a whole, suggesting a need for the industry to address these underlying challenges if spatial computing is to thrive. Let's tackle where exactly the billions invested in the metaverse went. First, over $80 billion spent by Meta on Reality Labs was channeled into research and development. This included pioneering new VR and AR technologies. Vast sums fueled the construction of sophisticated tech infrastructure, such as Meta's Horizon Worlds platform. However, it struggles with fewer daily users than games like Candy Crush, which boasts millions daily. High operational costs also absorbed funds. Maintaining cutting-edge labs and employing top-tier developers doesn't come cheap. Marketing campaigns chewed up millions to entice users and developers into these virtual spaces. Yet, tech limitations like clunky hardware and the infamous VR motion sickness hindered adoption. Consumers weren't ready, as evidenced by the lukewarm reception of products like the Apple Vision Pro, which saw disappointing sales despite its revolutionary features. Microsoft's closure of AltSpaceVR underscores the broader industry sentiment. The corporate metaverse pivot faced hurdles at every turn, making the technology more of a futuristic concept than a present-day reality. The money flowed like water, but made only a gentle ripple in a sea of consumer indifference and technical setbacks. The corporate metaverse, once heralded as the next great digital frontier, is effectively on life support. Meta's Reality Labs alone burned through over $80 billion. Yet, Horizon Worlds struggles to attract even a fraction of the audience of a mid-tier mobile game. With barely 200,000 monthly active users, it's a stark contrast to the ambitious visions of digital utopias. Even Apple, a powerhouse of consumer technology, faced setbacks with its Vision Pro. Initial sales were markedly underwhelming, leading to reconsideration of their strategy. Microsoft, meanwhile, decided to shut down AltSpaceVR earlier this year, redirecting resources to more promising initiatives like Microsoft Mesh, which focuses on augmented rather than virtual reality. As these giants retreat, focus is shifting towards practical applications of VR and AR that deliver immediate value. Industries such as healthcare, automotive, and real estate are now leveraging these technologies for training, design, and virtual tours, respectively. While the grand vision of sprawling virtual worlds may be on pause, the potential of spatial computing in enhancing real-world scenarios is just beginning to unfold. The metaverse as a concept isn't entirely dead. It's simply evolving into something more tangible and immediate. The collapse of the metaverse serves as a cautionary tale about the dangers of excessive hype and the failure to grasp consumer needs. While companies like Meta poured over $80 billion into reality labs, they perhaps overlooked the intricacies of user engagement and practical utility. In the future, success may come from embracing smaller, more achievable goals in VR and AR. For instance, integrating these technologies into fields like education and healthcare, where tools such as Microsoft's HoloLens already show promise, could offer tangible improvements and foster meaningful adoption. While the metaverse's corporate dreams faltered, the potential of VR and AR technologies remains compelling. In healthcare, VR applications are revolutionizing surgical training, with tools like OssoVir improving surgery proficiency by up to 230%. Education is another frontier. ClassVR has brought immersive learning experiences to over 25,000 schools worldwide. And in gaming, the success of Beat Saber, boasting over 4 million copies sold, highlights the entertainment sector's continued embrace of VR. These technologies still promise transformative impact, suggesting a bright future beyond the metaverse's collapse. To keep up with the shifting world of spatial computing, it's essential to stay updated and engaged. Explore practical innovations like Apple's ARKit and Google's AR Core, which are revolutionizing mobile experiences. Attend industry events like the Augmented World Expo, where pioneers share transformative ideas. By understanding these developments, you can better navigate the future of VR and AR technologies and harness their potential to drive innovation in your own field. The metaverse dream isn't dead, it's just evolving. Meta's $80 billion investment highlights the scale, but a new approach is needed. Imagine harnessing creativity and genuine consumer needs beyond flashy tech. Exploring practical applications like virtual education, remote collaboration, and immersive storytelling could lead the way. Companies that innovate with purpose rather than hype, such as Niantic's augmented reality with Pokémon Go, might define the future of spatial computing and VR/AR.